Ladies and gentlemen, good day and welcome to ZIM Laboratories Ltd Q4 FY24 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Deepika Sharma from Go India Advisors. Thank you, and over to you, Ms. Sharma.
Thank you, Neil. Good afternoon, everyone, and welcome to the Q4 and FY24 earnings call of ZIM Laboratories Ltd. We have on the call Dr. Anwar Daud, Chairman and Managing Director, Mr. Shyam Mohan Setu, Chief Financial Officer, Mr. Zulfikar Kamal, Director of Finance, and Mr. Zain Daud, Investor Relations. We must remind you that discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company may face. May I now request the management to take us through the financial and the business outlook, subsequent to which we will open the floor to Q&A. Thank you, and over to you, sir.
Thank you, Deepika. I'm Anwar Daud speaking, and a warm welcome to everyone joining us for Q4 and financial year 24 earnings conference call of ZIM Laboratories Ltd. I trust you had the chance to review the Q4 and FY24 financial results and earnings presentation available on the exchange. So despite the initial challenges presented by the currency crisis in some of our existing markets in financial year 24, we were able to make a strong recovery and deliver a somewhat robust set of results, underscoring the company's proactive approach in redirecting focus towards its vision and financial goals. This underscores the team's ongoing efforts to create substantial value for shareholders. In the quarter 4 FY24, ZIM Laboratories Ltd demonstrated strong financial performance with total operating income reaching 1,179 million, EBITDA and PAT margins improved to 14.6 and 6.9 respectively. For FY24, the company achieved 3,674 million in total revenue with EBITDA and PAT margins at 12.7 and 4.7 respectively. The pharmaceutical business remained the primary revenue driver, constituting 81% of total revenue, complemented by nutraceuticals contributing 19%. In quarter 4, financial year 24, the formulation business surged, contributing to 540 million to total revenue, marking a 7% quarter-on-quarter growth, while the PFI segment showed robust growth at 597 million, a 39% quarter-on-quarter increase, also indicating a somewhat easing out of the currency crisis. For financial year 24, exports contributed 78% to the POI, accounting for 2,870 million, whereas domestic business witnessed significant growth, reaching 804 million, driven by institutional orders for our differentiated nutraceutical products and strategic partnerships with total Indian MNCs for our NIP, a very welcome news for us indeed. NIP and OTF segments showed substantial growth, with NIP revenues reaching 73 million in quarter 4 and rupees 241 million for financial year, while OTF revenues reached 39 million in quarter 4 itself, with 131 million for financial year 24. The combined contribution from NIP and OTF, including licensing fees, constituted 12% of total revenue for financial year 24, amounting to 437 million rupees. There has been a significant improvement in business performance both in Asia, outside India, and in India itself. The revenue contribution from Asia, ex-India, grew by 74% year-on-year, totaling 439 million for quarter 4 and 1,235 million rupees for financial year 24. Indian market revenue rose by 35% year-on-year to rupees 209 million for quarter 4 itself and and 804 million rupees for the entire financial year 24. R&D investment remains at 11.2% in the range which we have been operating in the last few years, and for quarter 4 financial year 24 itself as well, and 9.7% for the entire year. The company completed one NIP dossier filing in the quarter 4 in 4 countries of the EU, Spain, Portugal, Poland, and Italy, and 7 filings in farming and ROW markets for quarter 4. ZIM filed 3 NIPs in financial year 24, totaling to 5 NIP filings till date in the EU, and 40 NIP filings throughout financial year 24 in farming and ROW markets. Additionally, the niche formulation business saw progress with 39 dossier filings in financial year 24 and 5 registrations coming through quarter 4 financial year 24, totaling 26 registrations for financial year 24. Furthermore, in the ODS business, ZIM submitted 17 dossiers in quarter 4 financial year 24, totaling 51 submissions for financial year 24 and received 9 MAs. This will all be reflected in the business to come in this year and later on. Now I'll hand it over to Mr. Patro to take us through the financial highlights for this Q4 and the entire financial year 24. Mr. Shyam Patro.
Thank you, sir. Good afternoon, everyone. Let me present the overall financial results for quarter 4 as well as full year financial year 24. In quarter 4 financial year 24, our total revenue income, operating income, reached at 1117 million rupees, indicating 22.4% increase on a quarter-to-quarter basis and 11.2% increase on a year-on-year basis. The EBITDA for Q4 stands at 172 million rupees, reflecting 36.5% on year-on-year quarter-to-quarter basis and 6.8% on year-on-year basis. Increase is there, with an EBITDA margin of 14.6%. The PAT, that is profit after tax, for the quarter was at 81 million rupees, showing a growth of 68.8% on quarter-to-quarter basis and 12.5% year-on-year margin, with a margin of 6.9%. The pharmaceutical business continued to grow in quarter 4, reaching 978 million rupees, a growth of 38% on Q2Q and 4% year-on-year. Our R&D investment in the Q4 represented 11.2% on total operating income, with expenditure of 31 million spent on bioequivalent studies and registrations. We continue to upgrade our plant and equipment with a capex addition of 318 million rupees in quarter 4. Let me come back to in full year, that is financial year 24. The total operating income was at 3,674 million, with improved product mix and better region mix, leads to higher net margin compared to FY23. This is the last year. FY24 EBITDA stood at 465 million, down by 20.3% on a year-to-year basis, but EBITDA margin stood strong at 12.7% owing to strong Q4. The PAT for FY24 was at 170 million rupees and 29.4% year-on-year decrease. The PAT margin was at 4.7%. The pharmaceutical business contribution for the FY24 increased to 81%, that is 2,966 million rupees, from 77% in FY23, which was 3,082 million. The export business contributed 78% of the FY24 of total operating income. The total export for FY24 amounted to rupees 2,870 million rupees. The India business, excluding ZIM export, grew by 81% on year-to-year basis to 647 million in FY24. The capex spend totaled to rupees 832 million, aimed towards plant and upgradation of equipment for EU, that is European, and developed market supply. The finance cost rose to 69 million from 56 million in FY23, with a gearing of 45%, and overall borrowing stood at rupees 1,064 million. That's all from my end. Now I would like to open the floor for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask the question. The first question is from the line of Ankit Gupta from Bamboo Capital Partners. Please go ahead.
Yeah, thanks for the opportunity. My first question was on the NIP funds. We have seen
Ankit, sorry to interrupt you. Can you please speak a little louder?
So, is it better now?
Yes.
Yeah. So we have seen.
Sorry? Hello? Ankit, can you hear us? Hello, Ankit, can you hear us? Hello, Ankit, can you hear us? Ankit, are you able to hear us? Due to no response, we move on to the next participant. Next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello. Thank you for taking my question. Sir, I'm very new to this company, so I was just looking at numbers and I see our ROE is less than 10%, and over last 5 years there hasn't been much growth. Can you comment why is that? Is it, sir, that we are building on some capacity and our utilization is lower, sir? How should we think about this, sir?
Yes, the company is in the midst of a pivot from being basically an ROW and emerging markets company to a regulated market operator. It's a technology play, so we are a company which specializes in complex products, difficult to make product, and we are in the phase of filing and upgrading and making our capacity, ensuring that our capacity is there in line with the agreement we have signed for regulated markets in Europe, Australia, such as Europe, Australia, Canada, New Zealand, Brazil, Mexico. These are the markets which we are targeting with our products. I think most of these products are, being put on the website, unless we have some confidentiality agreements or strategic reasons for the same. But the filings are normally, we have now 5 products which have been filed in Europe and other markets. So, since last year we have actually started the initial supplies on the basis of the emails we have received. So there is a big churn in the kind of business we are doing. So the business almost looks the same or going slowly, but the markets are changing, products are changing inside the markets, and that's reflected in the margin and the kind of business that we do, and that's what we try to bring to our shareholders, the insight that the company is playing in the value side of the market now.
Got it, sir. And sir, in our PPT, we are talking about the strong NIP pipeline, and we have around 15 odd products. So when and how much can these contribute to our current numbers?
We have already described quite a robust increase in the NIP and OTF portfolio that we have, contributing to this year's turnover, and especially the last quarter as well. I think I already mentioned that, and I'm about speaking. So we saw that the NIP revenues reached 73 million in Q4 financial year 24. You have to take note of the fact that these are new products and being launched. Registration took 2 to 3 years, and now we are in the market with these products, and the initial sales are coming. So from 73 million in Q4 24 and 241 million for the entire year, while OTF revenues reached 39 million in Q4. So you can see the increase in quarter-to-quarter basis, and the entire year was 131 million for financial year 24. Both these categories of products, which are quite where we don't have many competitors and we are focusing on the regulated market, are playing out now. There's a substantial increase from the last year, and 12% of the total revenue came for these products, and it amounted to 437 million, as I said in my initial opening remarks.
Got it, sir. And so, sir,
only 5% of the total turnover is W. So the turnover was more. In any way, it's double.
Got it, sir. And sir, in the coming years, what kind of growth are we expecting on the whole company as a whole?
Well, we try to be conservative about it, but as I said, although I can't give you the any forward-looking statement on the growth, we have our budget which will be posting on the site. But for sure, the last quarter itself shows that the traditional markets that the company had, where we had these currency problems, there is some easing of the currency problem, although still there, and that is what actually decreased the overall performance of the company. So that part seems to be easing out, and new areas in which the company wish to focus are showing a robust growth. So the NIP products that we have markets in billions of dollars, where we are concentrating we are focusing to have a very small part, not even in single digits of the entire business that exists for these products, where there are not many players.
And so, sir, in NIP, is it margins are like much better than existing?
Yes, that's right.
So any comment what kind of NIP margins are there?
No, I'm not at liberty, but they are far better than what we have. Yes,
Got
you
it.
have the gross margins that we have. The NIP products actually contribute to an important part of those margins, building up those margins.
Sure, sir. Thank you and all the best.
Thank you. Next question is from the line of Ankit Gupta from Bamboo Capital Partners. Please go ahead.
Yeah. Is it better now? Are you able to hear me?
Yes.
Yeah, we can.
Sure. So, sir, if we look at our NIP revenues, they have done pretty well in FY24, and we have touched almost 24 crore revenues in FY24. So over the next 2-3 years, how do you see this revenue shaping up? If we compare to the overall size of the company, it is still like NIP plus even OTF revenues are still almost 10% of our revenues. So how do you see NIP or NIP plus OTF revenues scaling up for us over the next 2-3 years with quite a bit of launches planned during FY25 and 26?
Well, over a period of time, we think that NIP plus OTF contribution would be about 30 to 40% of the entire business. And because there are many registrations in place, so once those registrations come in, the submissions are in place. So when the registrations come in, we would actually see from an incremental increase on this share of the business to some kind of a geometric increase. Because of so many submissions being in place and the registration would be coming in with more frequency. And this is an effort of the last 4-5 years, and only few of the MAs have come in. Yeah, it depends on the increase in business. Of course, we are, we have these agreements with distributors in regulated markets and we have new entrants. So it depends on their performance as well. But the projections that they have provided are quite promising.
Sure.
Of course, I would like to qualify this with the remark that it's early to tell.
So can the segment become can this segment become, let's say, 150, 200 crore of revenue contributing segment over the next 3 to 4 years?
Yes, I think that would be right. That would probably be in the range of that, and the company, in fact, a large part of the company's growth and revenue would come from the new products.
Sure. And sir, any comments on the base business? Our supplies to developing countries. How is that expected to do? That business last year had faced quite a bit of challenge. So going forward, how do you see the base business growing for us?
Well, as I said, the currency shortage is easing out, and there is a huge shortage of these the kind of products that ZIM makes in these markets. But as you can see, the FF business continues to grow. It is the best part of the de-risking strategy. We are in many geographies in the FF business, the finished formulation business. TFI may take some time to come back, make a comeback, because this currency shortage will ease out slowly, and there are several products under registration in these markets as well. So once those registrations play out, maybe it will start growing again. I can't say when we will see these results, but we believe that the regulated market play that we have is quite exciting for us. And there's a span of the last 2-3 years in which we have been developing and filing these products, and we have not seen too many new players as competitors from India or any other market for these same products. So in that sense, strategically, we are very strategically placed with these products. There are not many players who have entered in these intervening years. Last 2 or 3 years, there's no new players very few new players have actually been able to find these same products successfully.
NIP is also being registered in Africa.
Yeah, that's also my colleague is saying. NIP is not only being filed in the regulated markets. We are trying to register these products in the emerging markets as well, where we see a lot of interest in these kind of products now, because the market always looks for new and complex products where the competitive space is rare.
So can we assume that the base business, including the new NIP that we are filing in this unregulated or semi-regulated markets, can lead us to growth in the segment by, let's say, 15-20%? Is that possible over the next 3 to 4 years?
Sure. That is how it will grow, because the old products in these markets will keep on becoming commodity, and as you know that there is a regulatory tightening and localization everywhere. So that's to the benefit of companies like ZIM, because we are already operating the facility that we have is EU certified, EU compliant. We faced the inspection, the renewal inspection in January, which we have we have put on the website as well. So these kind of the regulatory mechanisms that we have favor companies like ZIM even in the ROW and emerging markets, because we supply all our products from the same facility.
Yeah. And then the capex of 83 crore that we have done in FY24, has there been any capacity enhancement that has happened because of that, or it's primarily to primarily for upgradation of plant and making our plant ready for supplies to regulated markets? And
it's for both. It's the capacity enhancement. Looking at the kind of business that will be there in 2 or 3 years, we perceive that we because of the kind of agreement we have signed and what we see with the new product that we have, the NIP product that we have projections, and we are preparing to be able to supply these products comfortably to our partners on the regulated as well as the emerging markets. Also, if you see the renewed aggressive inspection by regulatory agencies and customers have started all across India, wherever companies have from wherever the companies have partners and their own filing. And we have tried, now we are building the facilities we are building are in line of the current interpretation of how the MOH of these countries, regulated market countries, are interpreting the guidelines, the kind of regulatory tightening we have seen because of some events in the last 1.5 years itself. Even in India, if you see the regulatory tightening, we are preparing some part of the spend has been directed towards improvements and regulatory compliance, and the rest of it is for capacity enhancement.
Yeah, so just one last question over the overall strategy and the growth prospects of the company. If you look at over the past 5 years from FY19 to FY24, although the texture of the company has changed significantly, investment in NIP plus the R&D spends, but that has still not translated into revenues, which have been revenues and profitability improvement. In FY19 we were around 330 crore top line, and we have ended this year FY24 with 370 crore top line. We do understand that last year was a challenging year in terms of currency issues from developing countries. But and over these 5 years we spent almost 170 crores capex for the capacity enhancement or upgrading our facilities. Plus our R&D spend has been quite high for given the size of the company. So despite all this, at least the revenues haven't been the numbers, the effort that we have put in, the capex that we have put in, hasn't translated into numbers yet. So do you think now the time has come that at least from FY25 we will see some jump or significant jump in revenues and margins, and that will start the growth momentum for the 26-27?
Well, I could explain this in one word, yes, but allowing me to do it in 2 or 3 sentences would be better, because then this is the whole sense of the whole strategic direction that ZIM has taken. It's a pivot from being largely an ROW and emerging market company, which means the whole canvas of the facilities, the products, the kind of people we have, the kind of regulatory culture company possesses. So this whole pivot has been there. So we are looking at value rather than the top line. We are looking at safeguarding value for all our stakeholders and shareholders. And we believe that the place that we are going to would offer substantial value, because it allows your company to be more in the space where it is competing with large players and in a very interesting space. If you see, it's not a conventional generics company. So that's taken some time. But if you see, talking about the profitability, if you see the kind of expansion and the expenses we do on our R&D and capacity building, large part of those expenses have come from the money we have made. So certainly, I would say we seem to be on the right track, and the net margin has kept on growing. So, leaving aside the size of the operation at this moment, you would see that the company has always been a very conservative borrower, and makes use of the money it makes by creating value. With the margin that it generates, the kind of cost control that it does, in that sense, it's a very judicious and conservative company. And all that we have achieved with all these new products, the capacity that we have built, has been largely from our own approval.
Thank you. Ankit, I'll request you to come back for a follow-up question. Requesting all the participants, please restrict to 2 questions. Due to time constraint, as we have a long queue, we will request everyone to stick to 2 questions per participant so the management can address all the participants' questions. The next question is from the line of Darshil Pandya from Fintrust Capital. Please go ahead.
Hello.
Go ahead.
Can you hear me, sir?
Yes,
Yes.
you're audible.
Yes, sir. So, as far as our conversation has been, so in a post NIP filing, it takes around 1.5 to 2 years for it to be
That's right.
to be done, right? So, as we can see, we have been filed some dossiers in Q2 FY23, and so do we expect this to be live in this year, or any guidance from your?
We expect some of them MAs to materialize this year, and possibly, I don't know. We can't really predict, because if you, I'm sure you are aware of the fact that there are big queues in registration of products, receipt of MAs, and even inspection on the regulated markets post-COVID. So they are going by their priority. Wherever we feel some of our products are in the, we are getting some of the MAs on accelerated approval basis. So we are optimistic.
Got it. And what would be the market size of this product, sir? If you know.
Then the market size would be in billions. We are thinking of maybe 0.25% of that.
0.25% of the market size.
Yeah.
Okay. And sir, your comment.
Billion, for example, the product that we have filed just now, in totality, the global market size would be, excluding US, would be in 7 or 8.5 billion.
Got it. Okay. And sir, your views on, if you want to see the nexus between the borrowings and the fixed assets, how is it turning out?
I think Patra can take this. What do you think?
Specifically, the borrowings that they're making, that is toward the term loan as for capex only. So that will have a positive impact, because at the moment they're building the structure, building the plant for regulatory compliances, which will add value to our the agreement has been signed and audits have been happening.
Okay. So where are we in this position? Like, where will the debt? We will be taking some more debt on this, or this is the peak? Or
normally what happens? So suppose I have a requirement of 100 rupees. So I bank on that only to the extent of 25 to 30, not beyond that.
Okay. So, but eventually we will be taking more debt, or no? That's the primary question.
It depends on the capex targets. So it is in the process. But at the moment, let me restrict myself to the ratios which I am talking about.
Okay. One last question, sir. We have been seeing a good uptake in the EBITDA margins, and primarily I heard you saying that some currency issues are getting solved. So what is driving these margins according to the management? Like, is it only the currency, or what are we seeing more?
The product mix and as well as the NIP and OTIF, what you are discussing, so that is giving a good contribution. My net margin, in spite of there is a big drop in my top line, the gross net margin remains same then on in absolute numbers. So that shows I'm in a strong path.
Oh, okay. And got it. So this is primarily driving the margins. That's it. So we see this stabilizing here, or because it's somewhere we are almost at the previous year's margins that we have been doing.
It will be. The reason being the amount of efforts has been given in the company, including the filing has been done and contracts have been signed with the customers, the large customers. So there should be a positiveness.
Thank you. Darshan, I'll request to come back for a follow-up question. Participants, strictly kindly request to 2 questions per participant. Next question is from the line of Rohit Suresh from Samatva Investments. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. So my first question is on the NIP segment. So it seems like 2-3 years we've been working on this segment.
Rohit, sorry, can you speak a little louder? A bit of background noise from your end.
Yeah. Is it audible now?
Yes.
Yeah. So on the NIP segment, it's been 2 to 3 years since you've been working on this segment. So what have been your key learnings, challenges, over the past 2-3 years, and what steps have you taken to improve our reach in the NIP segment?
So, shall I put in a better perspective? This year, the NIP contributed to the extent of 241 million and 200% increase on a year-on-year basis. OTF contributed 131 million.
You're talking about the challenges which we have faced.
Yeah.
So, of course, there were two things which were new. First of all, we were a new entrant into this market. And secondly, the market itself also found a new player in us who does this kind of complex work. Oral film is actually a change in dosage form. So there are regulatory challenges with proving your bioequivalency to a tablet or a capsule, and the understanding it takes for a regulator to actually accept these products. So I'm happy to inform you that there are at least 2 MAs which in oral film which we have received. So we understood the challenges and we could interpret the bioequivalence, and we received the MAs and we started supplying a few products as well in the regulated markets in oral film. In the NIP, there is a similar situation where, because we are addressing some problems in the existing originator molecules and originator products, and we have non-infringing delivery methods and some solutions over the existing products using our technology platform. So it's always a little bit difficult to tell a regulator that this is not a me-too product, it is a me-better, but bioequivalent product. And those are the challenges, but it's interesting as well, because otherwise how would any company stand out from the crowd and be able to command some kind of a premium? So that's what your company is doing. And till this moment, I believe we have had challenges, but we have faced them, and there are 5 filings. We can look forward to the agreements that are being signed with partners who are quite excited to be able to put these kind of products into the market and compete with large companies and the Me Too people and Me Too manufacturers and distributors of these same products, because of the UXP that we are bringing in.
Got it. Thank you. So my second question would be on the CapEx guidance. So for the next 2 years, what will be our CapEx, and how much of it are we going to do it through internal accruals, and how much will be through debt?
I think Patra has already answered that. About 30% of this will be through borrowing. The rest of it will come from internal accrual.
The CapEx amount, will it be what we did last year?
No, now it's easing out. We are almost there. Yeah, we are in the process of completing what we designed for the list of the NIPs that we have. I think we are just looking at the enough capacity to be able to service whatever agreements we have signed and whatever market share we are targeting. So that's what necessary, and we are in the process of completing it.
Got it, sir. So my last question would be on the European contribution. So last quarter you highlighted around third or fourth quarter of FY25 when you see the EU part starting to contribute meaningfully. So are we still sticking to that guidance of the EU part?
Yeah. The NIP and OBS business, if you see, some of the business was in Europe.
Okay. So in the NIP of the 24 crores that we have done for the year, how many products are actually we have started into initial sales that you highlighted?
About 4 to 5 products.
Sorry, how much?
4 to 5. Out of which 2 contributed about 80%.
Got it, sir. So great, sir. Thank you so much, and wishing you all the best. Thank you.
Thank you.
Thank you. Participants, please restrict to 2 questions per participant. Next question is from the line of Yogansh Jeswani from Mittal Analytics. Please go ahead.
Hi, thanks for the opportunity. Am I audible, sir?
Yes.
Yeah. So, a question to you is regards to the nutraceutical business that we have. So we see quite a lot of fluctuation, volatility in the sales of nutraceuticals. So why is that the case, and going forward, can we expect sustainable growth in this segment?
Yes, yes. By coincidence, the effect of the currency, currency availability problem was more on the nutraceutical side, because that's where the nutraceuticals were going in a concentrated manner. So, as the currency issues are easing out, probably the nutraceutical would little bit come back to, we hope, would come back to their original, because that's a legacy business the company has. So we would continue with them in the old volume and maybe in increasing volume. And we have a few more products in the nutraceutical business as well, using our liquid in pellets technology. Liquid in pellets, oil in pellets technology. So probably that would grow, because we are also introducing new products in that category.
And the margin profile would be similar to our existing product range, or would it be better or lower?
It would be a little better, because nutraceutical business as such does not have the kind of technology play that ZIM believes it can contribute.
Understood. And so secondly, coming to your capex part, so this year we see on the books around 80 crores of gross block has increased, and there's further 20-25 crores of CWIP. So if you could broadly break it up in terms of where we have spent in terms of, say, land, warehousing, plant and machinery, a broad ballpark figure would be helpful. And what is our capex outlay for FY25 and if possible for FY26?
I think land is just would be below 10%. Balance is in my plant and machinery and upgradation projects, and specifically warehouse. And about 25 at the moment I have not disclosed, so I am constrained to not to give this figures.
Okay. So for warehousing, you mentioned what was the amount that you spent on warehousing?
Around 22 crores has been invested in warehouse.
Got it. And so what would be the revenue potential of this entire capex in terms of, say, asset turn, if you can share a number, or maybe some working based on your NIP projects or anything that you could share?
No. The revenue. How much can you do? How much is the capacity? Only we are working on the maybe 2.5 times. What we have.
As of now, the capacity for NIP product is hardly utilized, only less than around 10 to 15%. There is a scope to increase up to 40%.
Thank you.
The revenue potential. Talking about how much can you do?
So that is what we are making our going forward. All our most of our revenue, as we have mentioned earlier, the market size and all, around 50% going forward, the revenue will come from the NIP, and the capacity is sufficient to cater that projections.
Thank you. Request to all the participants. Kindly request to restrict to 2 questions per participant. Next question is from line of Dwanil Desai from Total Capital Investments. Please go ahead.
Hi, good afternoon, sir. You're able to hear me?
Yeah.
So my first question is on the NIP side. So 5 filings we have done on the Europe side. So on that, if you can give some idea as to whether we have received any MA. If not, how many of them we have already signed agreement with our partners, and how do we look at the competitive intensity within each of those segments? And we have indicated in our pipeline almost 8 filings on the NIP for FY25. So am I reading it correct? We filed 3 in FY24. So are we doing 8 filings for NIP for Europe in FY25?
No, so Daniel, this is Zain. I'll just comment on that. So see, 3 filings we have done in Europe. The other 8 filings that we're talking about is in the pharmaceuticals and ROW markets. The European filing stands at 5 now till date.
Right.
So 5 products we filed. Some of them we filed in multiple countries. And for the NIP, so the other filings you're talking about are pharmacing and ROW. MAs are yet to come from the European market. That is what we are expecting is going to happen in the second.
So 3 MAs are already there, and another 5 have been filed. Yeah. So our expectation is about 2 to 3 MAs will come in this year. That's the expectation. But as I said, we have to qualify it because most regulatory authorities are swamped with a lot of work. Once they started operating after COVID, they have a huge waiting list from all companies.
Right. So, sir, all these MAs, so when we say we have signed agreement and based on that we are putting capacities, essentially it is for the filed products, right? So let's say if we have filed 5 products in Europe, for all the 5 we have agreement in place. Is that right?
So most of the products we have agreement in place, both for Europe as well as for pharmaceutical and other markets. The marketing, the revenue generation will only start post receipt of MA. The projections are based on the customer's estimation of the market, what they are going to do. But and we have to depend on them for marketing these products. So yes, all the most of the products which have been filed has been supported by sufficient marketing agreements from our clients.
Okay, got it. And on competitive intensity side, sir, if you can comment, you said that very few players are there. So each of these 5 products, how do we look at it? Maybe 3, 4 players or more in each of the products?
Yeah, we feel that most of the products that we have labeled as NIP have not more than either there's only the there's only the innovator being present. So 3 products are like that, and there are most of the products that we have 3 or 4 competitors. The third part where we have some advantage over the innovator and whatever is available in the market with using our technology. Same product, same bivalent, but some advantage in size, in some way providing convenience and additional plus point to the patient and therefore to the marketers.
Thank you. Next question is from line of Akshada from Vivo Commercial. Please go ahead.
Hello, am I audible?
Yes, ma'am.
Yeah.
Yes. So I'm new to the company, so I had a couple of questions. What exactly are NIP products that you are mentioning right now?
I think Ben will take
this. So, see, NIP is like a term we've coined internally. These are some products in our business line which have come as, which are at the forefront of the technology and innovation we're trying to do. If I just define them, NIP are basically products which are newer molecules. These are not older than 10, 20 years. These are just starting to come off patent, and they are very complex to make. So what we are trying to do is trying to make them either through a non-infringing technology platform or trying to make them in a way which is bioequivalent to the originator, or trying to add differentiation in the drug delivery. And yeah, so that is why new innovative products, we're adding some innovation into them. And because they are newer molecules, we are expecting that we would be at the front of the line when it comes to generics.
Okay. So would this be more API-related newer products, or would this be more final formulation-related products?
So see, the product in itself, the molecule is new. Let's just say the innovator must have synthesized this molecule 20, 25 years ago. So the API comes off patent, then you get the formulation. So we are in the formulation space. We are working on the formulation part of it.
Thank you. Akshada, I'll request you to come back for a follow-up question. Requesting participants to restrict to 2 questions per participant. Next question is from line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. Sir, I'm also pretty much new to the company. I just need to understand if the Q4 numbers that we have done, is it because of some seasonal impact because we are mostly export-centric, and if not seasonal, then how much of this is going to be sustained over the coming year, FY25?
Well, we are looking at it as easing of the currency problem that we faced in the 3 quarters prior to that.
Sure.
And a spurt in the NIP and oral film business, which we were expecting to come in the final quarter of this year. So together they have contributed to this surge in the quarter. I think NIP and ODM business, we are, as we have said in answer to the few other questions that were asked, that we think that these 2 businesses will keep growing as we file and as the MAs and registrations come out in our various markets. That is one. And our legacy markets, of course, as the currency problem ease, we will go back to the good old days, and we always have had a strong business in the kind of product that we were making in those countries where we face the currency problem. So on both ends, I think it will be better. I don't know how much better, but the currency problem impacted a legacy business of the company which it has been doing since the last 16, 17 years. It's a pretty robust and steady business. So the moment the currency problem eases out, we will go back to the old growth and old, the old products which we are already doing well.
All right. And is this 13.2% margin that was generated, is this sustainable for FY25 and 26?
Which margin?
The EBITDA margins of 13%. So is this sustainable for the full year FY25 and FY26?
It should be.
All right. And any aspirational revenue for the coming 2-3 years that we have in the top of our mind?
No, I'm sorry, we are not in a position to comment on that. We try to avoid any.
All right. No. Thank you.
Thank you. Next question is from the line of Sanjeev from SA Consulting Group. Please go ahead.
Namaskar, sir. Am I audible? So I can.
Yes. You are.
Sir, I was reading through a few of the words. One is OTF. Can I know the full name of it?
Oral thin film.
Oral?
Thin film. OTF is oral thin film. Also, it is known as ODS, which is orally disintegrating strip.
Oral thin film. Okay, got it, sir. Got it. Okay. Sir, just now I heard that you are developing some newer molecules. So, can I know, in our existence of the company, how much newer molecules we have already developed and they have been in use now? So, can I know?
Sir, we have never developed a new molecule. The company is a pioneer and a player in the formulation technology area. So, using the molecules which are newer, which meaning the molecules which are off patent or coming off patent, we create formulations which which match and in some way have some kind of a unique selling proposition. Whenever the problem becomes, whenever the molecule becomes generic, whenever the generic players are allowed to enter, we use the technology where we feel that our technology where we feel that we can provide an advantage to the molecule, and then we kind of test to see whether it is equivalent but better, more convenient for the patient. So this is our that's how we work.
Good explanation and good clarity now to me about the subject. Now I'm coming to one more point that there is some clerical issue on presentation page number 5 that we have written it as 200%, but I think the growth should have been 300% from 8 to 24 million.
Is it? Which presentation are you referring to?
Presentation page number 5. Presentation page number 5.
Yes.
Percentage is 200. According to me, it should be 3 times.
Are you talking about the slide which has highlights Q4 FY24 as the heading?
Sorry, I'm so sorry. It is page number 12. I'm so sorry. It's not 5. It's page number 12 in presentation, where we have shown NIP revenue rising from 8 million to 24 million.
Oh. 24%.
The growth is 200%. It is 200% growth, right? 80 plus 80 plus 80. We'll check that, sir, but I think the numbers...
Actually, I think it is 3 times, so it should be 300%.
Yeah.
But anyway,
so percentage-wise will be 200, but we'll get back to you on that. I'll get on a separate call with you to discuss that.
Sir, it is 240 minus 80, so it is 16. So 8 to the 16, that is the 16 is the growth.
200% growth and went up to 300%. You're right.
You're right. It is 300% achievement.
Okay. Now coming to license fees earnings. So license fees is our earnings, or license fees is the one that we have to pay for registration and etc.
So, sir, I think these kind of questions we'll get on a separate call. I'll take you through the entire one. We'll keep the questions more towards the quarter and the year. You can get on a call with me. My name is Zen. You have my number on the presentation also. So we'll get on a call and explain the entire business.
Okay.
Invited to visit us also, sir.
Oh, so kind of you. Sir, can I know your name again? You just said, but I could not follow.
My name is Zen, sir, Zen Daud. You'll see my name and number at the last page of the presentation.
So kind of
if you get in touch with me, I'll take you through the entire business.
I am deeply interested in your company, so I would really call you and get details. Thank you very much.
Sure, sir.
Thank you, sir. Thank you very much.
Thank you. Requesting participants to restrict to 1 question per participant and kindly join the queue for a follow-up. Next question is from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Yeah, hello. Am I audible? Hello?
Yeah, you are audible. Go ahead, sir.
Yeah, good afternoon. So, sir, I think you mentioned that today at this point of time there are about 4 or 5 products which are contributing to our NIP, and out of these 4 or 5, 2 are contributing 80%. So I mean, let's fast forward to let's say next year, FY25, end of FY25. How many? So this 4 or 5 will move to how many products as per you? Like this pool of 4 or 5 products will move to how many products? And like, will the kind of concentration that you're seeing will that be there still, or like other products will also start to contribute and fire in terms of revenue? I'm only sticking to next 4 quarters.
I think the second part of your, your comment makes sense, because as products are registered and they are introduced into the market, more and more products will start contributing from more and more geographies. So it's going to even out. In any, if you see, for any company, about 20% of the products give about 60-70% of the business. So that's a kind of a formula for anything, including pharmaceuticals, isn't it?
Thank you.
Hello?
So we move on to the next question. Next question is from line of Tushar from Yogya Capital. Please go ahead.
Thank you, sir. All of my questions have been answered.
Thank you. Any other questions or clarifications?
Tushar?
I think Tushar has said that his questions have been answered. I think we'll move on to the next participant.
Next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my question again. Sir, given you are saying that currency issues and all have gone away now, so can we expect some, say, 500, 450 crore type revenue for this?
Well, I qualified my statement. I said the currency issues are easing out. They have not gone away. Unless the global economy itself, the interest rates and all those things start kind of unwinding. The currency issues in small economies, ROW and emerging markets will continue for some time.
Got it, sir. So can we expect, say, because last year we had around 400 crore type revenue, can we expect some growth on that, say, 450 crore type revenue for this?
I should hope so.
We are all hoping that.
We are hoping. We have a budget for that to be able to.
We are not giving guidance in the first.
But in the end, we are a value player. So we look at the margins and the EBITDA more than the top line. The top line will come by itself if there is value.
Thank you. Next question is from the line of Mohit Jangir from Inved Research. Please go ahead.
Yeah, thank you for taking my question. I hope I'm audible. So my first question is on the capex side. If you have incurred capex on upgradation of a plant for regulated market, so will this require an audit from FDA before we can start commercial production of NIP dossiers?
Well, some part of the capex has already been audited in January when we had the inspection from Europe. During the year itself, there have been several client and partner audits as well. There has been an audit from Turkey, for example, which is the EU. We are expecting the inspection report and the CAPA to be filed by us later in the year. And there are several more inspections which have been triggered. So as we are in the process of capex, we are looking forward to the audits and comments. But as also we have said a few minutes earlier that the capex that has been planned will be slowly closed. We are through most of the capex that had been planned 2 years back. That's the status as of now. Can't say whether we will not go into another scheme of capex later on. At this moment, too early to call.
One more thing, whatever capex we are building, so this is based on the consultant review as well. The consultants are having a good standing in India, pharma consultants. So all these aspects we are keeping in mind while investing in capex.
Okay. Okay, my question was whether our NIP commercialization will be delayed because of this capex.
No. That might be
time consuming. Okay. My second question is on R&D side. So our R&D expenses which are recurring and hit on a profit and loss, they have remained the same as to FY23 numbers, while capitalized numbers have increased. So can you explain what are these expenses? And what is the budgeted R&D spend for FY25 as percentage of revenue or in absolute terms? And how many NIPs are we expected to file in FY25?
So as you very rightly said, the R&D spending will be equivalent to the percentage of around between 3 to 7% of the total revenue. It will remain the same. The pipeline of R&D is in process. We are in process of filing and developing new products as per the technology which has been already developed by us, like oil and pellet technology and other technologies, and more NIP and non-infringing products will come out. So it will be in the same range of last year what the things we are doing. NIP filings, we are whatever we have been filed around 7 products last year, we will continue to plan the same this year also. But it depends on various factors of completing buy-selling studies and other completion of other dossiers and other required studies required to be done.
Thank you. Mohit, I'll request to come back. Participants, please restrict to one question per participant. Next follow-up question is from the line of Ankit Gupta from Bamboo Capital Partners. Please go ahead.
Yeah, thanks for the opportunity again. So my question was, I have 2 questions. So basically, one on the domestic market. We have seen a significant jump in our revenues in the domestic market in FY24. So is this a sustainable number that we are looking at? And you also said about PFI filings which are there. So we also said about NIP products which are planned for the domestic market. So if you can talk about that. And the second question was on this NIP products. Out of the 5 products which we have filed in the European market, how many are expected to be launched in the second half, as you were saying? And the capex that we've done of 80 crore this year, what kind of asset turn do you see over the next 2-3 years?
Yeah. So first point, I will explain the domestic market. So the most important thing, PFI, we are not selling PFI in the domestic market. So the most important, we are only selling formulation in the domestic market, and which is going as per the plan. We are expecting the similar business.
Yeah, our domestic market performing, not PSI. So our domestic market revenues have scaled up from 35 crore in FY23 to 65 crores in FY24. So
it may not be of the same percentage growth, but definitely the growth will be there in the domestic market. That is the plan for the current year. Pardon?
Is this the new base now, 65 crores?
It should be. It should be.
And NIP products in the domestic market, if you can talk about that.
Yeah. Most of some share of NIP product is included in the domestic market, and we are trying to increase that share also.
Thank you. Next question is from the line of Anmol Das from Arihant Capital. Please go ahead. Anmol Das, may I request you to unmute your line and go ahead with the question, please?
Sure. So, sir, wanted to understand, you have been increasing your R&D expenses over the years, and wanted to understand the kind of product and new molecule that you are saying. So, what kind of new molecule this is under development?
We are not basically an inventor of new molecules. We are a formulator of existing molecules which are off patent or coming off patent, and which have we use our own platform technologies, and we use we try to give an advantage to the molecules from what they are being used, the way in which they have been used. Maybe they have some problem, for example, in swallowing or taste, or something. So we try to make it more convenient. So it is a generic product with a difference using technology. That's what we do.
Thank you. Next question is from the line of Dhanil Desai from Total Capital Investments. Please go ahead.
Sir, thanks for the opportunity. Sir, if I look at your slide number 15, where you have given the filings and etc., I think I had some doubt. I think Zen tried to answer that, but I am still confused. So it mentions that product 456 is filing for registration in EU in FY25, and then product 9 to 13 again filing for registration in EU and other target markets in FY25. So all in all, 8 products. So how many of them we are planning to file in EU market out of the 8?
So see, we have filed 5 totally. That is, if you're looking at the slide, product 1 and 2 have been filed, right? Product 3 has also been filed, and we have filed 2 more, which is product 7 and 8. So 5 we have done. Now remaining, what we are planning to do is going to be in FY25.
Thank you. Next question is from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Yeah, hello. So my question was, sir, I mean, if I look at your gross block today, it is about 300 crores. And historically, I mean, so far our asset turns have been around close to 1.1, 1.2, based on the revenues that we are doing. Now, obviously, you're saying NIPs are going to be better value. So, I mean, as the business sort of evolves over the next 2-3 years, what kind of asset turns are you looking at? I think Mr. Daud said that you are looking at 2.5 times. So is that the number? I mean, I'm not asking when this will happen, but just generally.
The capacity, the installed capacity can deliver that kind of.
So very rightly said, yes, we are looking at that number. And that is the ideal number which should go, because there is the present capacity is not yet fully utilized. It is just started for the NIP. The products are filed, the facility is ready, it has been inspected, agreements have been signed. So definitely, the projections of the customers are there, but it all depends on the market, continuous market, and when the customer, the product comes and the repeat order comes. Definitely, we are looking at that number.
Thank you. Next question is from the line of Mohit Jhangir from Inved Research. Please go ahead.
Yeah, sir. First of all, please let me ask my question. you did cut me in between because I was asking my question. I was in the queue from last 45 minutes, and from the very beginning, you should moderate the session, not in the end. So that is the feedback for IR. So, sir, my question is on the R&D side. I was asking what is the budgeted R&D spend for FY25, and if I have understood it right, that recurring expenses will remain the same while capitalized can increase in FY25.
Yeah. So as I mentioned earlier also, we are spending around 7-9% since last many years. The R&D expense continues to remain the same of the total revenue. Again, you are absolutely correct. First, let me apologize you for the wait, and I'm sorry for that. But as far as the question, answer to your question is concerned, the recurring expense will continue. As you have seen in the presentation, our R&D team is stable, and we are trying to increase our R&D team. All our expenses on the revenue side, expenditure are being debited to P&L because they are all recurring as per the accounting standard has to be debited. Only the bioequivalence studies and the product registration expenses are being capitalized. And going forward, when you see the pipeline as mentioned in page number 14-15, so their bioequivalence studies are going on. So whenever the payment comes on that part, it will be definitely capitalized and will be more because this year we'll be planning to around do 14-15 filings and development product will there. And similarly, the registration expenses of Europe will come, which is a little bit costly. So the filings and the PV expenses will be capitalized and will be more this year.
Okay. Sir, my last question is on the balance sheet side, if I may ask.
Yeah.
Okay. So, sir, do we expect the debt to come down in FY25? And what is our inventory management plan? Is our inventory levels have increased substantially during FY24? Yeah. And what is the normalized fixed asset turnover we are targeting? Because
first let me answer the inventory part. Yes, the inventory was little bit increased for the planning part because we had received marketing planning, but they were able to, most of it was delivered in the last quarter. So and it is now being stabilized at our normal level of inventory. And the debt part may initially increase because the projects are, as mentioned earlier, the projects are just getting completed. So around 10% debt may go up. Post that, once the projects are complete and the repayment start, debt will start coming down.
Thank you very much. Ladies and gentlemen, we will take that as the last question. I will now hand the conference over to the management for closing comments.
Thank you. We've tried to address all your queries. Should you have any remaining questions, please feel free to reach out to our investor relations agency, Go India Advisor, for our investor relations in charge, Mr. Zain Daud. He was good enough to give us number and everything, so we welcome all your queries. And both will be more than happy to assist you further. Thank you and have a great day ahead.
Thank you.
Thank you very much. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.